Hi there, welcome back to Property Black Book. Today guys, I wanted to just give you a quick introduction to how we at Property Black Book think about property. But first, Property Black Book is your home on YouTube if you're a self-directed property investor looking to invest in property but you want to avoid the pressure sale tactics of salespeople. Through our channel and through our system, you'll be introduced directly to developers and given the tools to be able to negotiate for yourself without a single sales agent in sight. So to move on, when we think about property here in Property Black Book, we defined it down into seven key criteria. And the first thing we will talk to you about is defining your product. You see, when you have an investment property, it's not your home. It'll be somebody's home for sure, but it's not yours. What it is to you is a product. It's a product that you will intend to offer for sale or lease to a customer. So I'm going to talk to you about meeting your customer needs. And then the next thing we'll do is we'll talk about demand. Demand is your oxygen as an investor. We'll need to talk about how we can identify properties in high demand areas, those properties that are going to be the easiest to sell or the easiest to rent in the future for a profit. Then, timing. Timing is critical as an investor. The property market does not rise or fall in a linear fashion. Picking the right point in time in your property investment journey to select and invest in a property is going to be critical to your success. Location. We'll discuss location, but we'll talk about location from your customer or your future customer's perspective. Price. There's a big difference between price and valuation. Too many investors in today's market are being caught out with overpriced properties, coming to settlement and finding out that the banks are not valuing their properties anywhere near what they have been convinced they should pay for their property. So we'll talk to you about how to avoid that trap. Then we want to talk to you about the deal that you can negotiate. Often people talk about trying to secure a discount. We believe discounts aren't necessarily the be-all and end-all. If you can negotiate into the deal those things that you might be paying for out of your own pocket, and therefore keep the valuation of the property up, you'll get a better result. And I'll talk about that in more detail in a subsequent video. And then the last thing, and the most important thing, and probably the thing that most people forget, that is risk mitigation. Having identified those things that can go wrong and having a plan or a strategy for dealing with those things if they should arise in the future is again going to be mission critical to your future success as a property investor. So if you're somebody who is interested in investment in Australian residential property, in becoming an investor, well, click the subscribe button below, join us on this journey, and I look forward to catching up with you again in the coming weeks. Take care, guys.